Welcome to Caching Waves. This is an Elliott Wave update for XRP. Now I'm going to go over some things I talked about in the last video. I got a question about leveraging up. I'll show you how to do that, as well as my expectations moving forward, how the patterns can change using Elliott Wave theory. Okay, now real quick recap in case you're new here. I have this as a multi-year triangle. Looks like this in an idealized version. We have a 5-wave pattern. It's labeled as A, B, C, D, E, making higher lows and lower highs till we reach a termination point, and then we get trend continuation, which in this scenario is to the upside. So we have our A, B, C, D, E. E wave was in at 38.23. So in order to keep this count intact, we need to hold that level. Absolute invalidation of the triangle is this C wave. But for all these counts I'm sharing with you now, it's this E wave at 38.23. We're going to go down to the 4-hour. And discuss the two differences here. Okay, last video, I was leveraging up in this scenario, expecting a similar wave to this move here. We were coiling up and we wanted to break to the upside in a very fast manner. Now in Elliott Wave, which I've discussed with you, the reaction at the end is just important as the count. So in this scenario, we were expecting a crazy third wave to get the most impulsive, quickest price movement, etc. We did not get that. We broke down. Now, alternatively, I mentioned that this could be a diagonal. This was my alternate count if we failed, where we get a 5-wave move to the downside to reach our target as a C wave in a series of 3 waves, also called a wedge sometimes. Now, what we're looking for in that scenario is the 1-to-1 at 44 cents. That's where wave C equals wave A. That's a completed correction, and we look for trend continuation after of this move here, which would be a third wave and a larger version in a 5-wave move. This would be a wave 1 and 2 complete as this. We'd look for a larger version of this. After our wave 1 and 2, we get the most explosive third wave, which would be a 1 and 2 complete here, massive third wave. Okay, I suggested there could be the fact that we could be complete here in a 5-wave move, although it wasn't pretty. So 1, 2, 3, 4, 5. Still technically valid until we break that low. I'll show you how that can change, but it's not pretty. So right now my bias is that we get this diagonal to complete, come to the 1-to-1, which could take us out a little bit of time, early to mid-November, before we look for that move to the upside. It's also clear to note that our minimum requirement is that 618, which we've already gone through. So technically a correction can be complete any time here. So I'm going to go to the smaller time frames. I'll show you the option where we are complete here and where we need to come down to further downside. Now I'm just going to label this out. This is going to be in real time for you guys. What I'm looking for is a 5-wave move. If we are bearish here between the 618 and the 786, and finally close to that 1-to-1, something like this. What you see in green there is the high probability zone for a third wave within a diagonal. And each one of these waves is a 3-wave move, ABC. So looking for 5-3-5s for each one of these waves. 3-wave move to the upside, 3-wave move back down. Okay, so let's go down to the smaller time frames. Now, first, let's just discuss the way we can move to the upside, which seems like not really realistic at the moment, although it's still valid. I always count counts as long as they are valid. I'm saying this is low probability, but it is technically valid. Now, this is a very ugly wave. The way I would count this as an impulse, again, low probability, is a wave 1, 2 with a flat. We got our third wave here. In this one, wave 1 would be extended, 1, 2, 3, 4, 5. We then get a flat for our 4th, and finally our 5th wave. You can see it's not pretty whatsoever, but that's how I would count it. I think it plays much better as an A, B, C, or W, X, Y as a three-wave move, and expect continuation to the downside. Now, there's two ways I would count this in the correction. This all comes down to strategy, okay? Now, I was looking at this on a couple different exchanges to see where lows were. First, let's talk about the bullish scenario, which we are getting close to here. You can see we're getting close to a golden zone too. So if we are getting a reversal and we're going to continue to the upside, one thing to note with XRP, we do get some pretty ugly bottoming patterns. I just wanted to give you an example here. You can see it's similar to here, similar to here. We get ugly reversals. So I'm not surprised if we happen to continue here that we got an ugly reversal, right? Tends to be the norm in XRP. A lot of second guessing yourself in these trade setups, unfortunately. So there's our golden zone. We're coming close to it. Our most likely area for a wave 2, if this was that ugly wave 2 I mapped out to you, is the 50, 618, 786. So we're right in our zone for that. Now, can we count this as a completed correction? It's really an ugly count. I've gone over this a few different ways. This looks like a three-wave here. I had a hard time counting 5 all the way down to the 15-minute. So I'm seeing a couple different things. I did measure this for our B pocket here, our B zone. So you can see all these. So I took the measurement from the drop of this first wave. This zone can be considered a B wave within a running flat where we make a lower low and a lower high. So all these can be considered corrections. So the one thing I'm considering here, because these are all three waves, this looks like three waves, this looks like three waves as well, is perhaps we're getting a combination here where we get something like this. This would be a 3, so that would be a W, A, B, C, D, E, X, very long wave, and finally our Y, and this would be a triangle. We need the AC, A, B, C, D, and the BD. This would be more of a barrier to the downside. But you can see that fits nicely. The only thing I'm wondering about is the extensions here. I'm just doing this in real time with you guys. Wouldn't want to pass like right at that zone. Yeah, this is probably the best look for this one. And this would be most likely a double zigzag. ABCX triangle. A, B, C. It looks like we have 5 waves completing. So that's probably how I would count that to have the right look. The Y wave takes longer than the X. Nice drawn out X wave. That's probably how I would draw that and look for this wave. The next move to the upside to potentially get a nice V bottom reversal, like a quick recovery. Get over top of this 4th wave in that scenario of the C wave and look for a sideways ABC. This is where I would consider getting into a position, not until I get this though, and stop at this low. Now, if it's a crazy rejection, I would consider buying, triggering in long above this level and stop at wherever the low is. That's how I would play that. But that's what I'm looking for a completed correction, right? But there is one more option. Say we come up here, reverse. The way I would draw that, if we get one more wave down, is potentially, since these are all 3s, this could actually end up being a diagonal to the downside as an A wave. something like this. A, B, C. We still have our triangle, but it would end here. A, B, C, D, E, as you can see. And in that case, we can get one more wave down before reversing, actually coming down to the golden zone. So that's if we come up, fail on that, get one more wave, then do that V recovery I mentioned. So do we have a WXY complete or an ABC almost complete? It depends how you label this, right? That's how counts can be the same but different. So the most important thing when you're tracking these things, as you can see, is the reaction. The reaction is when the count is most likely complete, right? So that's how I would consider buying this to the upside. And this is how things can merge. This can even be a 3-wave move, like we talked about, or a 5, as you saw, but very ugly. And we can correct to the upside and end up making some sort of diagonal, right? And that can be our 1, 2. So just keeping all these things in mind, I'm trying not to overcomplicate things, but this is how patterns get created. All right? You can't get so confident on one and be like, this must happen, because I don't know what's going to happen. My job is just to track, and when one is complete, I want to see the reaction, and then maybe I'll put some money into it, right? Now let's talk about the bearish scenario. In the bearish scenario, we're within that 3rd wave of the diagonal to the downside. So we'd be looking for 5 waves down, right? And the only way that makes sense in the bearish scenario is the diagonal. But instead of an A wave, or sorry, instead of a W wave, it's a A wave. It's a wave 1. Sorry, geez. So this would be our wave 1 as our diagonal. Oh, it would probably actually come out here. It would probably actually be extended out. One sec. Yeah, so 3rd wave wouldn't be the shortest. I'm just doing something here. It would probably actually be something like this. That has the right look to it with a little bit of overthrow for our 5th. Something like this. It's more of a channel, and just because this starts with 3 waves. So it would be something like this. 1, 2, 3, 4, 5. Now what's not pretty about that is how short this retracement is, right? It looks like maybe a 236, which is quite rare. Oh, maybe a 382? Yeah, basically a 382. Not out of the realm. And I think you can hopefully see where I'm going with this. This would be our 1, 2, 1, 2. Oh. This would be our 1, 2. 3's coming down here. Go up 1 degree. So in this scenario, we're looking for this C wave within the 3rd, which should be 5 waves. And we'd throw on our fibs. Look for that 50. 50, 618, and the 786. That would be our zone. We're looking to create our 1, 2, 3, 4, 5, like so. So the difference between those counts, we are complete potentially, or one more move down for our, if it's an ABC rather than a WXY. So as you can see how these two counts differ, what's most important is, this is why I say watch the reaction. What happens here? Do we get an A, deep B, C, or a zigzag? So if we get a zigzag A, B, C, we'll say we get that. Well, if we're complete as a WXY, that should be our low, right? So what we'd expect in the bearish scenario is we come back, start trending to the downside, break this B wave. But if we're bullish, we would probably expect this to be a 1-2-1-2. So we'd expect to continue here. So what's important is after this move, do we break this level or not, right? So any trades to the upside, if we make that V bottom recover and I'm able to buy in here and we start to break out, my stop will absolutely be at that low no matter what, and probably be riding just past the 618. That way I'd lock up profit if I'm able to buy this pullback, even if it fails on me. Now, if we get this ABC, your best bet, in my opinion, if we get a nice 535, is to sell a trigger order below this B wave, if this is an ABC. And stop can go at that C wave wherever it is, right? So that's the area that's the most important. That's the area I'm most important in it. But if we get this move up, a nice ABC, obviously I'm going to take that trade and hope we get that third wave, or a 1-2, then that third wave. Or if we break below, I'll probably get stopped out somewhere here around break even and look to shift short off this, stop at this low, at this high. All right, I hope that wasn't too complicating. This is why I try and put the most important counts up, but there's always many options, right? There's always many options. These are the two most probable, bullish, bearish. All right, guys, so I hope that was helpful. Thanks for watching. I'll see you on the next one.